that I was good at, and I'd at least try to advertise my services on Fiverr. If I was really good at tutoring in math, then I would do that on Fiverr through a webcam, which pretty much everybody has a webcam on their computer or a laptop. Alternatively, maybe you can do some basic photo editing or other services $20 to $25 an hour working on Fiverr, or even more, especially once you start building that reputation. Remember, expect that anything that relates to reviews, the first period of time is going to take some time investment from you. It's kind of
opinion, at least when it comes to public companies, is a company named Fiverr. Okay, this company's ticker symbol is FVRR. This is their main competition. There's a stock that's priced at $80+ a share, and this is a company, Fiverr, that is not even close to being at the scale that actually Upwork is. I think you're getting a far worse deal if you're buying Fiverr stock right now than Upwork. Fiverr basically has revenue in the past year of 107 million. They would need a 3x. Think about this for a minute. They would need a 3x their revenues just to equal the place where Upwork's at here today.
being able to hire some other dude anywhere around the world. Think Fiverr, think Upwork. Basically, we can now hire other people around the world with hammers anywhere we want because of technology. And that keeps wages lower because there are always other people willing to work for a cheaper price than somebody potentially local.
This space long term will probably be Fiverr. I think it's going to be between Fiverr and Upwork. But like we talked about with the whole Microsoft Teams and the whole Slack situation, right? Not everybody's just going to go to Fiverr. Not everybody's just going to go to Upwork. There's going to be plenty of companies in this space long term. Okay, who knows who wins it the biggest, right? Is it them? Is it Fiverr? Is it somebody else? But I can tell you, Upwork will likely be one of the biggest players, if not the biggest player in this space long term. And actually, it's a combo of stocks, Fiverr and Upwork, okay? Fiverr and Upwork, freelance economy. These two stocks have, they're the future of freelance economy. Let's just put it that way. They're the now and the future of freelance economy. They're just going to have a good next couple years. No, this is something that's going to continue to get bigger and bigger and bigger and bigger, and the snowball will continue to build and get bigger. That's just in the United States. Keep in mind, Upwork, Fiverr, these are already international companies and will be more and more international, okay?
After close, you also have UPS, Fiverr, you got Pinterest and Etsy.
I think we're over 22,000 members now, if I recall, in Stock Hub. So it's a growing beast. Hope you guys enjoy that, all right? Alrighty, let's start getting into this. So stock number 7 of the 7 stocks up here. First one up, Skyworks Solutions. This is my 7th biggest investment. So Skyworks.
Like, if give me 500 million bucks, I can pay a guy on Fiverr to do a rendering of a pickup truck and do a SPAC. I'm actually going to make a troll video where I do a fake SPAC. That's the first $1 trillion ever EV SPAC. I'm kind of letting this.
Some of the gains in my highest stocks like Fiverr, Zoom, Square. I think those were my top 3 from last year. So I pared them down, and then we have been rotating into private markets. So it started a thing called poorfounders.com, where we're investing into 40%. And then the best performing, I think, was Fiverr, up something like, I bought it at 30 something, and now it's at 370.
Oh yeah, darn 12x, you know.
Them and Fiverr that are going to be competing it out for who's number one and who's number two in that market long term. That total addressable market is crazy big long term. And how many
Fiverr as well? I prefer Upwork over. See, I rate overwork over stock. Oh, gotta pay attention, Kevin. There we go. Flatten the afters. It's good. So Fiverr, $9.9 billion market cap. Gosh, how does that compare to, wow, Upwork. Okay, so good 77% growth from 2019 to 2020, or through 2020, and that makes sense. You almost sort of expect that with the pandemic. Their margin is very, very, very high. It's at about 130 times earnings. Yeah, so I'll have to keep an eye on that. This poll goes. All right, I posted. Oh, somebody beat my paper losses. Oh, man.
Entirely possible. So one company that I like right now, for example, is called Fiverr. The ticker symbol there is FVRR.
I'm vested in that as well.
Great. I think that there's a lot to like about that company. It checks a lot of the boxes in what I'm looking for. It's run by its founder. It's nearing or at profit. What are the odds that I am right about Fiverr? I think the odds are favorable, but they're not 100%. They are not 100%. And if I'm right about Fiverr and I devote a small part of my portfolio to it, that will grow into a much bigger part of my portfolio over time. So I would steadily add money to Fiverr, say every quarter or so, as long as the thesis for me owning the stock was on track. And if I ever got the hint that my thesis was wrong, I would have no problem admitting defeat and saying I was wrong about this one that had characteristics that were similar to Fiverr, and just hold them voraciously, and eventually the winners will emerge, and they will capture a higher and higher percentage of my portfolio. So that's how I would concentrate my portfolio over time, is to make a lot of opinion. And again, it totally depends. If you look at the valuation of Fiverr right now, according to Yahoo Finance, it's currently trading at 54 times sales and about 1,700 times forward earnings. And if you look at those numbers, boy, do they seem scary. Those are very, very generous valuation multiples. But what that's telling me is that Wall Street is my thesis correct about this company. But if Fiverr succeeds in growing its revenue 30%, 20 or 30% compound annual growth rate over the next 10 years, today's valuation will look completely reasonable in hindsight. But that's
for such a phenomenal company to be selling off like this. Fiverr was up 5% this morning.
Space, you usually think about Upwork and Fiverr, Upwork, Fiverr, Upwork, Fiverr. Those are two names that always usually comes to somebody's head if you need to hire somebody for freelance work, right? They will go to Upwork or they will go to Fiverr, okay? And it really depends on if you're a small business, mid-sized business, or a large company, right? Large company.
Let's run it through our checklist and find out. My name is Brian Feroldi.
And my name is Brian Stoffel.
Brian, we've gotten a lot of requests to do a deep dive or semi-deep dive on Fiverr. So we wanted to show you how this company scored on both of our checklists. So we're going to be running it through the anti-fragile framework. At the end of the video, we will run it through my framework really quickly. As a reminder, here's what Brian's anti-fragile framework looks like.
If you know about Fiverr and what Fiverr is, and Brian, I would love if you could add some color here, because I know you've used Fiverr for our channel here. Is that correct?
That is. So Fiverr is an online freelance marketplace where you can go on and hire people to do tasks for you. Anything related to podcasting, data analysis. They literally have hundreds of product categories. So when it comes to things
offering their services on Fiverr's platform, the more people like you or I or someone else is going to go to that platform to find someone. And that draws in more more producers, more people that are willing to do things in the gig economy, which draws in more people who need people to do things. And that is work. The only two I know of are Upwork and Fiverr. So that's going to be a place where I'm going to go. So that brand power, I know that doesn't necessarily meet or match with how you think about brand value, but if it draws people in and then it adds that network effect, I'm willing to give them credit for that.
I think Fiverr has more mind share in the marketplace than Upwork, even though Upwork is actually the bigger company by revenue. If you were, and I've used both platforms, and if you said to me, name a place you go online for freelance, the first thing I would say is Fiverr. Like that would just be the one that I go to. So I think that the brand obviously doesn't lead to, say, people willing to pay a premium to use it, but I do believe that they have mind share, although could be wrong about that. But let's go next.
If they get 100 people coming on Fiverr in year one, maybe only 75 of them come back, and that's normal because these are small businesses, you know, that sometimes they go out of business, sometimes it's a passion project, sometimes they just they don't need Fiverr anymore, and so it shrinks. That's not what we're used to seeing, but it's also not a knock against Fiverr. That's just the nature of how this business works. The fact that it then starts growing after that shows that you winnow out those low-paying customers, and those high-paying heavy users continue using more year after year. But it's an important dynamic to be aware.
Millions of customers at this point are using Fiverr, so no customer concentration, Rick. All right, Glassdoor, what did you see?
All right, I went on. There's not a ton of reviews, but this is actually a business that's very small in terms of the number of employees. If I'm correct, they've under 1,000 employees. But these are great. Sold those off. He's been with Fiverr for quite some time. I think he has shown that this is an idea and a company that he's willing to stick with for the long haul.
And even a bigger plunge to the downside, 21% for Fiverr, which is also an online marketplace. It had a forecast that mixed expectations, and Uber, as we know, reporting a wider loss than expected, is having to pay drivers so much to drive. That's taken the stock down about 4%.
Companies have tremendous opportunity in front of themselves in terms of building out their businesses in so many different verticals, and there's so many different ways Upwork can make money.
Brand, but here are the websites. Go over to something like Solid Gigs, Upwork, Fiverr, and 99 Designs. What you want to do is sign up to those sites and offer up your service today. The problem I see holding a lot of people back is that lack of confidence. But you'll be surprised, what you may think you're bad at actually ends up being a huge help to somebody.
Looking at it, I'm like, the freelancing economy is just getting bigger and bigger. And Fiverr and Upwork have a huge market share in this, and they look like the two players that are positioned to thrive in the future, right?
Let's get started. The first stock on my list is Fiverr, stock ticker FVRR. This is an Israeli online marketplace for freelance services. I use Fiverr a lot, and if you think the gig economy is going up, then this could be a great stock to look into. Right now, one share of Fiverr is trading at $185.28 with a 52-week low of $129.21 and a 52-week high of $336. If we take a look at the one-year price chart, we can see that 1 year ago, they were at a pretty low price, shooting past $300 a share back in February 2021. Ever since then,
you had this week, guys. This is going to be a massive week. Fiverr could end up moving Upwork stock for me, right?
The next one that we're going to talk about Fiverr. All right, now Fiverr, this one is a good one. It looks pretty good. Like, bigger picture, it looks fantastic. It looks like earnings is about to push the stock higher. It looks like it. Something that you can do a
way that you can up the ante. You can go to something like Fiverr and get yourself skilled up to learn a little bit more about how you can grow your ability to sell a service. So for example,
should be bought on the weakness.
So you actually see the best opportunity in Fiverr and in Roku right now. Is that right?
Again, if you're putting, again, they're mid cap, not large cap. We can talk large cap, but within our universe right now, yes. We're looking at companies that when they were at highs, you had to really kind of price in your most optimistic
Your last pick for this year.
One of my favorites, and that is Fiverr, ticker symbol FVRR. Like many of the stocks that's on this checklist, this stock is down on its luck recently. However, I have owned and liked Fiverr very much for the long term for several reasons. First off, this company's top line is still growing at a very, very fast rate. I think that can continue for many years to come. Second off, this is a founder-led business. I love investing in companies where the founder is still in charge. And third, this company's financial statements,
I'm still questioning how strong the moat is.
fair enough, but as a user of Fiverr myself, I can tell you that I really like using this platform from the consumer perspective. And this company scores extremely well on my checklist. Does pretty well on yours too. All right, well, there you have it. There's our 10 stocks to start 2022. If you thing that we talked about earlier brilliantly. Let's take a look at Fiverr's recent results.
In the third quarter of 2021, Fiverr reported a GAAP loss of 39 cents per share, or about $14 million.
That sounds bad. However, during the quarter, the company also paid out $15 million in stock-based compensation. That was a non-cash charge. If you
with, you know, everybody out there, that's Walmart. Fiverr, another one of these high growth companies that everybody looks at, and you're like, I don't know if I want to own Fiverr right now, right?
Walmart, Dropbox, Fiverr, Yeti, Redfin, and Sunrun. Now on Friday, you've got DraftKings and John Deere. So the
Next up, let's talk about Fiverr. Love that company, great management, great results. And as more and more people go freelance, more and more people are quitting their job to start their own business. Fiverr is obviously going to gain from that as well. So let's have a quick recap. So last quarter revenue grew 42% year over year. Active buyers grew 33%. Spend per buyer, which is a very important metric, grew 20%. The take rate is extremely high, 28.4%, much higher than Upwork and all its parenting vision being one of those. But all the other companies, Airbnb, Fiverr, Roblox, will be covered on this channel, maybe even Roku. So stay tuned for that and do share.
Too much, okay? Fiverr, 78% down. I think Upwork's a better play in this space than Fiverr, but both are probably moneymakers long term. That's an industry
weakness in the stock price. All right, the final company that I added to was Fiverr. This company's market cap has fallen all the way to just $2.6 billion. Now, we've highlighted Fiverr on the channel before, but as a quick reminder, this company is growing very quickly. It is still led by its founder, and the financial statements are extremely strong. This is a stock that I own. Brian Stoffel does not, but it scores very well on both of our investing checklists. Now, the threat on the horizon, companies that I've talked about, the price to earnings ratio for Fiverr does not work nearly as well. This company is not yet optimized for profitability. Therefore, take these price to earnings ratio numbers with a grain of sugar, not salt. The price to sales ratio, I think, is more appropriate here. And while the price to sales ratio is still high in absolute terms, given the company's expected growth rate, I decided to add to my position. So Pinterest, similar, Zoom, Fiverr, what do all four of these businesses have in common? Well, if you've been watching my channel for any period of time, you may have noticed that they were all chosen by me in the Beat the Bryans contest that we have going on at stockcard.io.
Relatively recently, stock was up a lot and then it's come down. It's been super, super volatile, but I look at it as the leading stock in its space, which is consulting and
You might remember when we talked about this type of aspect with Fiverr, looking at the cohorts, looking at how that evolves each and every year, the return on investment. So we get the same ones right here. And obviously you might have noticed return on investment, very, very good. And as for the balance sheet, very, very healthy, $7.4 billion in available liquidity with 6.
At work, right? So let's just, use Upwork or Fiverr or sites like that to get that work done and spend maybe $5,000, $10,000 a year versus that $50,000, right? So
that topped in 2020, same with Fiverr. This never really got into a climactic period, so you actually just sold this as it broke its 10-week average and volume picked up. And so that's why, again, you always want to have variations on how to buy, variations on how to sell, know when to hold, because
everything from Angie to Etsy, Farfetch, Fiverr, Lemonade, Match, Peloton, Redfin, Roku. I mean, this is a tough list. So at what point do you have to, reassess the entire valuation framework here? I mean, how many more months do these companies have to stay at current prices before?
This is a stock that's down 11% today, and it's like, why is the stock down 11%? Well, Fiverr reported numbers. Investors didn't like the Fiverr numbers. The stock's down 25% as far as Fiverr goes. So if Fiverr goes down 25%, it's going to pull down Upwork as well. Those are
that has put its investors on a wild round trip to nowhere since it came public. This stock soared during COVID. More recently, the bubble in this company's stock has burst and it's currently down 88% from its peak price in 2021. So is the thesis for owning this stock busted? I don't think so, which is why I'm happy to open up a starter position in this company today. Why? Here's everything you need to know about Fiverr. My name is Brian Feraldi.
And my name is Brian Stoffel.
Together, this is simple, inspirational, and optional.
So how does it do that? Well, it is set up an e-commerce marketplace where businesses can find freelancers to get work done that they need, and freelancers can find customers for what they have to.
This company's revenue is recurring in nature.
So what kind of moat does Fiverr have around its business? Well, the first and most important to investigate is the network effect. Here's how the company visualizes it. As more companies come to the marketplace because they demand quality work, more freelancers will join and get more value out of it by supplying that quality work, which only draws.
We do think that there is value in the company's brand name, as Fiverr has become synonymous with hiring people online, although this is far from the strongest brand name we've ever seen.
Now, when you take into consideration the fact that buyers have flatlined and their spending has tapered off, we're going to say that the moat here is at least stable.
Turning to financials, Fiverr has been in high growth mode for many years, growing its revenue at more than 43% clip over the last 3 years. One thing to applaud about this company is that it's producing gross margins well over 80%, although it's not producing bottom line net income, at least on a GAAP basis. This company has consistently rolled out new products and new services that open up new revenue opportunities.
Because that net income was so low, we have little doubt that there's a ton of room.
But there are also smaller players such as 99 Designs and Guru. So far, Fiverr has had no problems attracting attention to itself despite that competition, which is towards the high end of my investable category.
And on my framework, this got a 9, which is right in the middle of my robust investable category.
Turning to valuation, we believe that Fiverr is currently between phase 2 and phase 3, although keep in mind this isn't a perfect guide. So we think the company is not yet optimized for the bottom line yet. Rather, we believe that it is optimized for revenue and gross profit. For that reason, we think the price to sales and price to gross profit ratio are the most useful metrics at this point.
So let's take a look at those. On a price to sales basis, Fiverr trades for about 4 times sales, which is far less than it did, topping out at over 50 over the last 2 years.
Have a trailing PE ratio, but it does have a forward PE ratio. That figure at 288 continues to look extremely high, but keep in mind this company is not optimized for earnings. I expect that number to drop meaningfully over the next couple of years as the company focuses on the bottom line.
So what do you think about our decision to purchase shares of Fiverr? Head on over to Common Stock and leave a comment in our display on this decision.
We're going to dig through your comments and highlight the best one, and whoever makes the most insightful comments will be paid $100 by Common Stock.
We want to give a shout out to Scoreboard Investor.
Yet, but if you guys want that, throw it down in the comments and I'll get to it eventually. But anyways, let's get into the first one, which is Wix.com. All right, so this is a Fiverr, again, another Israeli company that has been getting absolutely decimated by the markets. I'm pretty sure from their all-time high, they're down about 88%, which is majestic, to say the least. Now, this is their presentation. So they say, hey, large market opportunity for their freelancing space. Fiverr and Upwork should do great. I personally think those two should just merge into one company. I think that would be fantastic. Now, they got their unique e-commerce approach, obviously, with the freelancing. And I think the freelancing industry is going to keep growing very nicely, double digit, not only just in North America, but also trailing 12 months revenue up 30%. So Fiverr is a leading platform that connects businesses with talent. Again, the whole freelancing space and all of that. So again, they keep improving upon themselves, creating new products, whatever the case may be. They got the large market opportunity, all that stuff. The traditional workplace, they're like the future of workplace headwind for Fiverr and freelancing as a whole. So that's actually interesting. So that's a situation you need to think about as well. So their e-commerce approach, end-to-end platform, all that stuff. Again, you have to understand with their investor presentations that it is a sales pitch. Can't really.
Not fighting the Fed, not fighting the PPI, not fighting the CPI. I would like Fiverr. Right now, though, because it's losing money and doing all those things, I have to say, pass! Let's go to Chris in Michigan. Chris!
Subscribe.